Good evening, everyone. This is Anne Marie. This is the SPY report for Friday, May the 3rd. And of course, we'll be looking at the Qs and the IWM. Taking a look at things, we are moving higher. We had a complete retracement event, folks. This is just amazing what these charts are doing. And so let's take a wide angle look. Actually, we're going to take a little bit of a closer look, see what it is that's going on. Negative volume here. We've had, by and large, the selling candles been a little bit bigger than the buying ones. Tomorrow, very big day, job report. Chances are we're going to have a gap taking us into the morning. We had a gap today, or actually, sorry, we had a gap from the 30th to the 1st. We completely filled it, closed the day right at the top of the gap. But we've got ourselves a little doji up there. Let's take a look at what's happening underneath. You'll notice that the formations are a little bit changed here. I've added a much faster SMI to see if we can see any technical divergence. Now, we can see the charts moving upward, and so far we've got flat momentum. As we move from here to here in the price action, we see that price is actually moving up, momentum's actually moving down or sideways, and so we know that what we've got is a very tight area that feels like it's at the top of a wave. All in all, we are sitting above our VWAPs. We are holding resistance level 1 for yet another day. We didn't do it yesterday, but certainly the days before that, we'd been doing that nicely. What's the trade tomorrow? The trade tomorrow, ideally, would be a pullback into this level, 159.47-ish, and a bounce. The bounce is going to take us easily to the halfway mark, 159.79, 160.12. And then easily 160.79. Now the big picture event still shows target regions for the SPY stretching all the way up to 162. Just because we've got divergence, a little bit of it, does not mean that we are rolling over. It just means that momentum is flat to trending, and we're just going to keep doing what it is that we're doing. Here's the thing. Two things can happen. We can gap up, we can gap down, or we can make a huge spike or drop and then recapture it to come into the day, opening day, as flat. How we trade that is the following. If it gaps up and then pulls back before the market bell rings, you got to look at where the high is in the SPY. That high right there is going to be the threshold. If it breaks that region, it's going to accelerate to the south, probably pretty rapidly. I think there are a lot of people trying to step in front of a short here. Just get that feeling that that's what they're trying to do. So if we breach the levels and begin to carry, it's going to run all these stops. All right? However, if it gaps down and then tries to recover, then we look at where the gap down is, right? Remember, we've got a formation here that accelerates way past here. This is the crab. I've taken that formation off so that we can just look at the charts a little bit more cleanly. But this crab is the one accelerating way up there, giving us prices into the 160s. If we lose this level right here, that formation is broken, and that level is 157.73. There is an ABCD pattern that puts us right into the space right here, and so if we take a look at that and we say, all right, well, maybe we are sitting at the top of the event right here. What do we need to do? We want to watch it. Anytime we lose the pivot, folks, these are the natural step-down events. Watch the pivot points. Many times, if we accelerate up, we either test the day's pivot or the prior day's pivot before moving in the direction. Notice the latest wave action has had steep retracement. If we pop up, we are to imagine a steep retracement as well, simply because we do have this kind of divergent movement here. The fast SMI is still showing a nice clean updraft, but what it's not doing is making any higher highs. And notice this. See the level here? Big drop off. See the level here? Dropping down here, but the chart is moving up. And as the chart moves up, this is giving us a little bit of a lower high. That's the measure of divergence. Not showing up here, showing up here. So we're going to watch that for just a little bit. Do I have a particular bias here? No, I think we're pretty choppy. I would imagine that with this kind of formation, we get ourselves a pullback, but that just means zigzag action. So not a good place to say, hey, listen, I'm setting out a new swing long. That's why the gold membership, which runs longer, is not putting out a lot of new things one after the other, because the market is cycling back and forth between bullish and bearish. So we're looking at that carefully. Hey, listen, if we breach the prior day's high, which is sitting right here, this 159.88, we are going to stair step into the next level, right? Look for resistance level 2, resistance level 3. Make sure that your candlesticks are giving you higher highs and higher lows. If they're not, take a look at that SMI. If it's rolling over, you know you're coming into relative support, right? Where do you put your stops? Listen, you put your stops a little bit tighter in these spaces, but you also need to be small sized, right? That's my big thing. If you want to give it flux to move in and out, you need a small size. But in the end, the best thing to do is to trade level to level and just get out. Put a trailing stop there if you want to, but it seems to be smarter to just move into these targets, and that's what it is that we'll be doing. Again, line in the sand here, 158.16 should bring us to this level. If it moves down through this level, 157.72, we're going to have shorting action. It's going to break the crab, and then that's going to give us a totally different formation. If the ABCD pattern that I measured is holding through, then what we're going to be seeing is a 61.8 pullback off of this wave right here, essentially. All right, let's take a look at the daily very quickly. It always messes these guys up down here, so I'm going to apologize up front for that. It's kind of a long video here. All right, so yeah, still seeing the divergence here. DPO still moving upward, but a little bit negative. That's awful pink to be in that region, right? It shouldn't be looking too much like that. In any case, all roads are pointing to slowing down, folks. They all are. When the SMI gets into these levels, pretty good likelihood that it's pulling back into support. I didn't say it was rolling over, but it is time to pull back into support, so keep your eyeballs out for that. Let's go to the hourly very quickly, and we can see the same sort of things happening here. Rolling very close to zero. I hate it when the DPO is like that. Means choppiness, right? DPO close to zero like that, it means chop. But very nice little channel event here. Doubt we'll be able to play that because of tomorrow's price action and what we're going to have with the job numbers, but we can see very clear spaces, so mark it down. 160.09, 160.77, and watch the day's pivots to help you decide what it is that you're going to do. Let's take a look at the Qs. Qs, this one still looks really good, right? 1618 seems to be the move. Look at where this stops, though. Right at R3 on the day. One candlestick runs from R2 to R3. That's a very hot candle. And when we see hot candles like that, we know we have the likelihood of reversal. hot candles reverse. Here's the last set of hot candles. This moved up here, plateau, inflection starting right here. Look at this. This moves up, begins to move sideways, and then fails. This continues forward. So again, notice how these things are moving quite in sync with each other. What do we see here? Same sort of thing. Gets up this high, likes the rollover. Gets up this high, likes the rollover. Now that's kind of a dry roll right there, but certainly a roll nevertheless. And so we are seeing all kinds of things that make that look like we've got a rollover in the mix. Now the real fast SMI is not doing that. It's kind of holding the region, but again, divergent, because this level is way higher than this level down here. So that is technical divergence, expecting these things to roll quite a bit. Let's go to the hourly chart. We pick out our levels. What are we looking at? Beautiful move here in the Qs, but flattening out. If we lose 71.16, going to be time to roll. We're going to go from 71.16 probably to 70.73. We might get held up by this VWAP, so watch it right there. But notice, this is clearly rolling over. That's flattening out. This is inflecting, and when these charts get to these levels, they roll. Look at that, right? The reason I love the SMI, as many of you know, is that it doesn't lie to me very often. And even when it does lie, meaning I've got divergence because it's going one way and the charts are going another way, it's actually telling me in that lie, quotations, exactly what it is that's going to happen ahead for the most part. Very, very clear. Learning to read the SMI is one of the best things that ever happened to me. And I use it every day, day in, day out, the best thing ever. And combining it, of course, with the pivots and the things that we look at, just super use of technical indicators. It's why you don't have to have a ton of them. You know, you just have a few. All right, that's it for that. 70.25 would be the next space it loses. And then, you know, it's got this area, the breakout area. That's going to be, you know, a broken return. If we get higher low, higher high, higher low, higher high, higher low, higher high, and then if it comes back down here, then this is broken, that formation is broken, and if we break out into this region and we roll, we could easily come all the way back into here. All right? A lot of very interesting things going on in the chart. Suffice to say, you better not lose this level and stay long. That's not going to be wise at all. If it loses the level, let it come back to 30 cents, and then you can hop back in. If it bounces off of R1, you know it's going to have a good chance to get an R4. But if it loses that level, all the buyers are gone from there, and it should drop all the way down into this region right here at 70.73. You don't want to take the long until it gets up over R1 if it does that pullback, however. Same thing. If it pops up over R3, you'll be able to take this one running, but realize because it does not have aggressive momentum events right there for it, it should easily stall out at the halfway point. That's 71.75. Qs are still looking very positive, but look like they want to take a breath. Let's take a look at the IWM. This one is probably the worst of the bunch. It's performing certainly the worst of the bunch. It's not made any higher places. It's not double topping. It's not broken out. It's not done anything like that. We're still getting high, low, lower high, lower low, lower high. Yeah, probably, right? What's the trade action there? Well, let's take a look at this. This is already rolling over, right? Doesn't look like the other charts, right? 4-hour chart, I mean, this thing's already rolled over. The DPO is already sitting here. The DPO goes below zero, you know, we're going to have more negative action. This definitely is looking quite negative. If it inflects downward, we know we've got downside action. So what's the trade? What do we need to look at? First of all, emotional candlestick pop up, and now we've got ourselves a little bit of a doji right above this 93.21 area right here. So what we're going to do is shift a couple of these levels up. That's really where that is. This one right about there. All right, so above 93.41, looks like we've got good price action there. Now, you might say to yourself, but that's not the high. Why are you thinking about taking a trade before that high is breached? Well, I have a series of candlesticks on the 4-hour, and they are all sitting well above the open of the prior candle. So right here, in essence, I'm not going to borrow that one. I'll borrow this one. We've got ourselves a very tight channel. Very, very tight. If we are to be conservative, let's move it to the top of that. That means long action above 93.48, but guess what? Short action below 93.24. It's going to be pretty. Here's the thing. We're probably not going to get to take advantage of that because of the gap action that's going to happen tomorrow when we get this numbers game, right? When this numbers report comes in, gonna be a big deal. Well, right now, silver's actually really accelerating quite a bit. It's gonna be pretty interesting what happens tomorrow. Anyways, so that's what we're looking for. If we break out above here, the easiest, most straightforward trade today, as I look at it, is sitting in the IWM, right? But it's also the weakest chart from the long perspective in terms of the regular formation, because it just looks really messy, right? It's got higher highs and lower lows. So if we're building out a little megaphone action here, then it should propel and get us back up into this region. So we shall see. Again, if it gaps up pre-market, watch for where the high is. Realize that if you pull back into the pivot, which is always the ideal trade, the pull back into the pivot and the pop out, if it does that, you're going to be in pretty shape to catch a very nice long. It's going to look very, very pretty. This will also be a butterfly formation if it does that, and that clearly pushes us up into this region. Longer term formations still pointing to the upside, but we do need to take a breath and work off some of these higher levels that we're seeing. All right, make it a good day tomorrow. Careful trading. Hopefully you didn't put too much on before the open of tomorrow, but it should look pretty nice. Something to think about actually is LinkedIn, which reported, I believe, quite favorably, but has dropped, I don't know, 20 bucks, something like that, in the pre-market, after market hours. So watch for that for recovery. All right, take care and have a great Friday and a great weekend.